Connecting Arizona. I'm Melissa Oldham with Malone's.
And I am Michael Ucolano with Barrett Financial Group and Barrett Capital Group. And we are here with a guest of mine, Scott Kerbaugh.
Hi, thanks for having me here.
Hi, Scott. Where do you work and what's your name, your full name, and what do you do?
My name's Scott Kerbaugh. I work for Arizona Financial Credit Union, and I specialize in lot loans and construction loans, so financial institution lending.
Okay. Lot loans and construction loans. So what are some of the clientele that you get coming to you like on a regular basis? Like, what does that mean?
So typically I'll have a homeowner that would like to build their own custom home. They come to us for financing, and occasional I'll get a builder that wants to do a spec home to start the build to sell it to somebody that doesn't want to wait 15 to 18 months for a house.
Oh, okay. And then they can just buy the land too from you?
Correct. They can use us to finance a lot, to purchase the lot, then start the plans in order to build the construction on it.
Okay, awesome.
And what type of profile would generally fit your parameters more often than not?
Well, I think being a local institution, we've got some flexibility in our box. They've got to be somewhere in that 30% to 20% down payment. They can use other type of property for equity or equity in the lot. So there's a lot of things that fit inside our box. But once in a while, I'll come across ones that don't, that might need to be outside the box, which is why I reach out to Michael to help them.
Okay. And do you have like a maximum loan amount type thing? I mean, how big can these houses go?
Great question. Right now, I think the highest one we've had in the last 12 months is about $9 million.
Okay.
So we can go pretty big. We have 3 going on in Silverleaf right now. That'll give you an idea.
Okay.
And as far as the differentiation, because I know you do different stuff for spec builds versus an owner occupant, maybe speak a little bit about that.
Sure. It's 2 different major animals. For a homeowner, we call owner occupied. We've got the ability up to $1 million to loan up to 80% of the total cost. That would be the dirt and construction. For a spec builder, they're a little bit riskier for us, so we focus on that 50 to 60%. Sometimes those numbers don't work for a builder, which is why we refer them over to Michael. Once they get the spec loan started and do the construction, and a particular buyer wants to buy that house, then they bring them to me. I do the construction loan for the buyer to kind of pick off where they're at. Then they go start the next spec loan. And that's how the builders are able to compound their growth in number of homes where people can buy it.
And you also do construction or commercial as well, right?
Yes, we have a whole commercial division as well. Fortunately, I'm very close to those guys, so we can do just about anything you've seen out there in the marketplace. I've had requests to do multifamily. I've had requests to do new construction. One of the things that have been really popular lately is for tenants that are renting a building and their rent is about equal to what their ownership payment would be. The SBA loves to do that because we can do SBA lending. So we're able to jump right in behind second lien position behind Uncle Sam on an SBA and take your small business person from being a tenant and a renter to actually owning the business. So that's a fun part of the business.
And do you, I know maybe your bank does, maybe you're not focused on it, but do you do any type of business lending?
Absolutely. There's quite a few things that we can do in the business. We can do collateral based. We can do strict line of credit. And it allows, the whole idea is a small community bank. We've been brought up to help the community, help small businesses grow, and give them traditionally better avenues of growth versus your national financial institutions like what we call the Wall Street banks. The nice thing being a .org, we're a non-for-profit. So we got to be able to cover our costs, but we focus on helping the smaller businesses and our community grow.
Oh, nice. Okay. So when you say commercial, I just want to touch on that. Like, does that mean what, like commercial property? Are we talking like business buildings? I know you said multifamily, but like, what if somebody wanted to build, like a hotel or something or anything like that? Does that fall into that category?
Absolutely. A lot of boutique hotels do. That fits right into our category. If you start going into a larger dollar amount, we've got some caps. So if you start thinking it's going to be over 100 million, we're probably going to pull away from that just because we don't want to put all of our risk into one particular project.
Okay.
A lot of the projects that we see coming out that we fund are going to be franchisees, such as a particular small restaurant, a 5-minute lube station. All of those things absolutely fit right into our niche.
Oh,
So more of like a flagged type building or company.
Correct. It works
Franchise type model.
Exactly. It works the best if we can collateralize it as a standalone. If they want to come in and do a major tenant improvement remodel on a strip mall, it makes it kind of hard because we can't collateralize somebody else's property. Mm-hmm. So that's more attractive. It's a standalone to us.
nice. Okay. So you guys are pretty busy right now.
Absolutely. Yeah. It's I don't know whose phone's ringing more. I think your phone rings a little bit more. But yeah, we've got a great team, and that's what I love about. Yeah. We're really truly a family where people will call me looking for something, and I recognize it's a commercial opportunity. I send it right to them and walk in the front door. It's not transferred back to a switchboard. It's a personal introduction, which is what I love about being with a smaller community bank.
Yeah. Okay. So it feels like a one-on-one experience, white glove service.
Yeah.
Oh, that's awesome.
Are you just Arizona?
Yes. All of our lending is here, but I literally can cover the 4 corners of Arizona.
Okay. So full state of Arizona.
Yeah, full state.
Entire
That's good.
state, yes.
Okay. And you also do other stuff as well. Like your main focal point, though, is construction.
Correct. On the residential lending side, I focus on the construction. I will focus on lot loans and some other unique things that we do, which is called a cross collateral. If Mr. and Mrs. Smith own their house free and clear for $800,000 and they're ready to downsize and buy a nicer, smaller home, it's also $800,000. I can do what's called some people call it a bridge loan, but I can do it on a lot longer term. Oh. I can do a 3 or a 5 year versus an 8 month bridge loan. So it allows them the flexibility to move only once, and it allows them, there's no prepayment penalty. So once they move to the new house, if it sells right away, they can pay it off. There's no penalty.
Oh, good. That's
and
good.
it gives them the flexibility to be able to do those kind of things.
No contingent offers. Yeah. Stuff like
Bingo.
that.
And realtors, I have to explain that often to realtors. Don't accept a contingency. Ask the potential buyer what their situation is.
Well, why would you accept the contingency? I mean, first off, our market's so strong, first and foremost. And second off, there's so many solutions out there.
I think what it comes down to, because I actually used to have my real estate license. So understanding the construction side, understanding the real estate, and understanding the financial aspect, it kind of gives you the trifecta of the whole process. I think a lot of younger realtors that are getting into this are looking at those as potential hurdles where they're not getting the kind of traction they'd like to. And so a contingency offer is better than nothing. Even though it doesn't execute, they get the activity award versus the funding award. Right. And I think that's some of the things that we're able to come in and help build that relationship with lenders, with realtors, knowing what we can do behind the scenes to help them put up the giant sold sign.
Right.
And you know what's interesting? It's I don't understand why anyone would take contingent right now. I actually read this thing on Facebook like 2 weeks ago, and it was this graph, and it was saying effectively Arizona has the third least amount of actual foreclosure sales per capita in the United States. It was Florida and one other Northeast state. Mm-hmm. Our market's so liquid. People want to buy here. Even if they don't live here, they want to buy here.
Yeah.
So there's buyers here.
Can completely agree. And one of the things that you'll see is they had big investor groups that were buying those homes, and they would buy them prior to foreclosure. So it didn't count as a foreclosure, but they were able to get those, put a small amount of money into them, fix them up for rentals, because the amount of population moving to Phoenix was tremendous. Yeah. And not all of them could afford to buy a home but they'd rather be able to rent a home for the bigger family versus an apartment for the same dollar amount.
Right. Yep.
So you're starting to see now those investors slowing down a little bit. So now we might get some adjustment to the market. I talk to a lot of realtors, and they're able, the ones that are big are doing the things and constantly moving. It's kind of that mid-market where I can't buy until I sell, and I can't sell until somebody sells so they can buy mine so I can sell. And so we have a unique situation where we can walk in and kind of fix the puzzle, fix the standoff. And if we're able to make a transaction happen, then dominoes kind of go back where we're able to effectively help 4 or 5 realtors put sold signs up because we only helped the last person at the end of the train.
Right. Right. So when you said it was similar to a bridge loan, so they really do have to kind of owe quite a bit less. Is it similar? I mean,
yeah. So what we do is we collateralize it. So we look at the value of property A and the value of property B, add them together and figure out where we are on a collateral basis.
Okay.
One of the things that you'll see a lot is with retirees or fixed income. They want to sell and buy. The challenge is they're not pulling a lot of money from Social Security or retirement. So their income is a lower amount, even though they're used to living at this higher standard of living.
Right.
We've got the unique ability to look at their assets and do what's called an asset depletion, which we're able to add into to supplement their Social Security or their retirement by taking some of those assets and doing a mathematical formula. We don't take the money, but if worst case scenario, we can deplete that on a monthly basis to make sure they can cover their mortgage.
for so many months.
Exactly.
Can you do that bridge thing from a second position on the first property?
No, we would take over. We could single deed a trust on both properties.
Has to be first on both.
Sure.
Okay. And, I mean, you're a credit union, right?
Correct.
So your rates are probably pretty great. I mean, I would assume, right?
Exactly. For your standard purchase, we can do the FHA. We have an FHA program. We finally got approved last year. We're typically about 1% lower than the industry standard for an FHA.
Okay.
For your straight purchase, we've got the ability to broker out to 95 different lenders.
He's with Barrett then. Is he all set up or no?
No, he's bank.
I'm independent.
He said brokered. So could we broker deals to him or?
No,
Can't to us.
Yeah, they're not wholesale.
Yeah, we don't do it that way. But because of our relationship with some of the other bigger lenders and bigger banks, we're able to capitalize on some of their economies of scale on pricing.
Okay.
So that's one advantage. As a credit union, a lot of times our fees are going to be a little bit less.
Yeah.
And especially for a member, we have a couple of great first-time homebuyer programs that my team works with that we can give incentives, $1,000, $1,500 incentive as a first-time homebuyer, or even a 97 or 98% loan.
Yeah.
So it gives them a chance to grow. The thing that I love about what we do is we have all this ability, but as a credit union, we have a fiduciary responsibility to take care of our 165,000 members by doing right by them. Meaning, let's look at the scenario where they want to go, what they want to do. We're not going to let them paint themselves into a corner. Right. We're not going to try and get a deal done just to get a deal because they're a member of the credit union. And those are the heartfelt conversations of can we, should we? And some don't like to listen to that. They don't like to hear it up front because they've had these ambitious goals. But the reality is they don't know what it's going to be like at the end of the day to choose, do I get food, do I put gas in the car, or do I pay the mortgage?
Yeah.
So that's our job, is to sit and explain from a consultative standpoint all the ins and outs of what they're looking to do. That at the end of the day, whether or not a transaction takes place, it has its own reward because you're doing right by your members, which is one of the parts of my job that I actually love to do.
Yeah. Protecting. I feel like so they don't get house poor and get in a bad situation.
Exactly. And you can't grow if you're in over your head.
Right.
If you're able, exactly. As you know, everyone says, well, I'd love to get the $1 million home, custom home. You know, they come to us and they said, okay, I'd like to borrow 100% of the construction. You're like, hold on, back up.
You're 20% down, right?
You're moving to the end of the board. We got to start at the beginning. Let's start here. So
I get those calls all the time.
Yeah.
I actually did a video about it. I had a guy call me 3 weeks ago, wanting to buy a $2 million apartment building. I said, okay. And it was like, the building was nice. It was essentially not even a good deal, which was the crazy part. And I go, okay, how much can you put down? He's like, oh, well, I'm looking for 100% financing. I'm like, what? He's like, yeah, it's fully occupied. It's fully rented, which it was. I didn't really explain too much to him because it was just didn't seem.
Gotta have some skin.
Astrophysics to a third grader.
Yeah. I explained
because
to
everybody
people,
would have an apartment complex then.
I mean, I
would.
really explained to people, like, I don't think people understand what a lender does. A lender is a lender. Here's some money we want to return. We don't take a risk. We don't take a piece of your deal. But they don't get it.
Right.
Oh, you have money. Help me and my bullshit idea and bullshit deal because I read something on TV about being a real estate investor
That's
or
when
a real estate buyer.
That's when you need to find a friend with money and say, hey.
That's called a partner, not a bank, right?
Oh, let's go in.
A bank lends money, wants a return.
Money.
They're not taking a risk. You're taking the risk by putting the money down. It's called first loss position.
Yes.
That's so true. I had a call this morning. I stepped up from a meeting. He owned a small lot in Carefree. It was zoned multifamily residential. The value, it's been in the family for years. He says the value is worth about $50,000, and he wanted to borrow 100% of the construction to build a duplex on it. And so once we discussed that the duplex cost would be roughly $600,000, I asked him and explained the percentages on what we'd be looking to do, that he would have to have about $210,000 plus closing costs. And he says, I'm a little short. I only have $25,000.
Yeah, that's a lot short.
That's a lot short.
Hey, you know what? Perception is reality. I like that the $175,000 difference to him wasn't that much. That's
yeah, that's
awesome.
True, right?
That's why I didn't send you.
I just like that was short.
He has good, positive.
And he appreciated it. I said,
yeah.
so other options are potentially looking to find a multifamily builder that you can partner with and contribute your lot to that project. It might not be profitable as much as you think, but there's no magic wand that this $50,000 lot somehow going to make you $500,000 overnight. Right. It just doesn't exist.
Yeah.
I think there's just so much, like, one of the things that I want to do on our show and the other things that I do is really kind of give the raw truth of possibilities of being in real estate. Cause I've done it. And I think there's a lot of great, real estate mentors and gurus, and they paint a pretty picture of what's possible. And there are some deals that are these one-off deals. I've done tons of 100% financing deals. Yes, I have done deals where my lender has effectively been a partner, but I've been in the business. I had a great deal. I have a great credibility. I have a great financial. That's not the standard. And so it drives me nuts when these guys make this possibility of that type of deal become the probability of what you're portraying because you want to sell hope to somebody who has no clue. And one of the reasons I want to dispel this is because I take a lot of these calls and they call me looking for funding, and I wish the market could be a little more educated so that they can have better expectations and more deals can be done faster.
Right.
So the whole money down thing, it's real. It's real. I don't care what any guru says, unless you've got the greatest deal in history. And even then, go to a bank, go to a hard money lender. Most of the time, they're still going to want you to have skin in the game.
Yeah.
Because at the end of the day, we still aren't going to, unless you're giving up a piece of the deal, we're not taking a risk. I don't want to fund like a partner and be paid like a lender.
Right.
We explain to people all the time a couple of things. Number one, hopium is a terrible business plan. So when I talk to people, the first thing I say is, tell me your scenario.
Yes.
What are you looking to do? And I can pretty much get an idea of the project. when I do that, my mentality goes to the 5 top reasons why it will kill the deal.
Yeah.
And so what I do is I try to kill the deal with them on the phone.
Yes.
And
He
what
said that.
happens with, if I haven't killed it by the 5th one, probably has a survival chance.
Yeah.
There's probably something there.
Right.
And so, that's important. And I have to realize and explain to people there's risk associated with it. And we tell people our borrowers will walk away from profitability and equity, but they won't walk away from cash. So when we tell them to put skin in the game, I own the lot free and clear. It's been in our family 37 years. It's worth $200,000. Perfect. Show up with 25 cash.
Yeah.
Why? Because I don't want you to walk from 25,000 cash because you won't.
Right.
Right. And I think when they look at, I need 100%. What I expect and what reality is are two different things, because they watch the infomercial on cable at midnight that says no money down, buy everything, and you'll be rich in 20
And no
minutes.
credit. You don't even need credit.
Oh, credit's not important. No. No.
I do the same thing with regular deals. It's like, how's your credit? Oh, shitty buy. Oh, do you have down payment? Well, I have one option, can you afford that a payment? Oh, you can't? Okay, bye. We just go through the list.
No, but
Sure.
I love what you're saying. So I have a new sales guy, and I'm teaching that. I'm looking for a reason to disqualify you. If we get past that, then it's probably a deal.
Yeah.
So I love that. That's why when you send me deals, I love when you send me deals, because I know it's got a high probability.
It's all thorough. Yeah. It's funny you say that, because I never realized I was doing the same thing. I'm not doing those type of deals, but
I think
you're still qualifying based on your
correct. Yeah. I'm
parameters.
literally going, I'm not going to waste my time if you don't have these credentials, which are the basics. I have alternative financing and creative financing, but also, are you willing to go to that higher rate and have that payment? If you're not, then same thing. I gotta go next.
This isn't, pick your hamburger. I want pickles and not lettuce. Like this is what it is. This is what it is. And that's it. It's not.
Yeah.
And I only want to pay X for it.
Right. You don't come looking for a loan and then saying what you naming your terms.
I want a $500,000 house with a $1,500 payment.
I had that situation
cash?
like 6 months ago. Talked to a family who was looking to build a house. They're from back east. He was a doctor. The son was a doctor. Started the whole process, got him paperwork, emailed it to him. They emailed me back, hey, these are the terms that we want. They're telling me what they were going to do and what they were going to pay. And I just picked up the phone. I just said, that's not how it works.
Right.
Correct.
And didn't care that they didn't call me back. Why? Because it's like, I don't need that.
You have other clients waiting.
Absolutely.
You can't waste your time on somebody who's.
Yeah. And I think a lot of people really understand, when the way that we were brought up, when you're put in a position of knowledge with somebody else, you have 2 options. You can either exploit them or you can help them.
Yeah.
It depends on your character. And I think being in the financial institution, but being in their shoes also as an investor, as a real estate agent, as a buyer, it's my job to help them. And sometimes no is the best answer. Yeah. And I've had people, somebody else would do it for me. I said, you know what? I'm going to put my head on my pillow at night, knowing that I didn't paint you into a corner. I can look in the mirror at myself and say, I didn't ruin your world, because I've gone through a downturn market a couple of times, and you do right by people. It's just all that counts. And so many people are looking for the quick payday. What is in it for me? And they don't care. And it's purely transactional. That's why my phone, and I'm sure your phone, is constantly being rung inbound by people or people that referred me to them.
Right.
It's crazy.
I think I see our industry is becoming a career-based industry again. And what I mean by that is, I remember when I first got in lending in 2002, there were a lot of people you talked to, like, hey, okay, what do you do? Well, I'm whatever they did. And and I sell loans on the side. Okay, cool, man. In those days, it's that market, that world supported that. I don't hear that anymore. So I think the days of calling the town whore is going to go away in our industry of trying to find the cheapest guy or girl.
Right.
Yep.
And you know what I'm saying? We're leveling up. I mean, this is a full-time business now, to the point where I don't think there's going to be a lot of that in the future, in my opinion.
I completely agree. You know, one of the things that I run into is I'll get, wow, your rates are a little bit higher, but your fees are higher. And my answer to that is, when we get to title, my fees will probably come down because I'm going to be conservative up front. I'd rather tell you, hey guys, guess what? It came down to here versus, hey, sit down.
Exactly.
And I have other lenders that they'll say, oh, well, I got this price and I got this rate and these closing costs. Up. Send it to me. I said, so why are these 5 fields empty? I said, I included insurance. I included your taxes. I included all this stuff, which I'm supposed to be doing because it's my fiduciary responsibility to show you what it's going to look like.
Yes.
Not mislead you to a point of no return where now I have you over a barrel because you're trying to close on a house and my numbers are showing up at title or nowhere even close. And I see it all the time.
Over promise, under deliver.
I call that worst first.
Yeah. Exactly.
Yeah. I hear it all the time from my clients too. They got a flyer in the mail. I'm like, oh, send me their loan estimate. Oh, they didn't send it? Okay, we're same thing, you know, it's not locked, you know, and then it comes back, oh, the points are actually this.
It was a 6-day lock.
Yeah, or something. Yeah, they're going to promise you the world, and then once they get you in, then, you know, it all changes.
I think, you know, with the internet coming out and us as consumers going to the internet and price shopping, we have the mentality we can do the same thing when it comes to lending for real estate.
What do you mean with the internet coming out, Scott? The internet's been out like 35 years. Where have you been?
But basically, it's touched everybody where they have this mindset that they can price shop. Yeah. And I run into that all the time. Well, I'm at so-and-so rate and so-and-so fees. And I tell them, look, what if I gave it to you at 3.5% interest, but I wasn't able to close on it? Is that a good deal? And they're like, no. I said, so right now, price isn't your number one factor. It's actually funding the deal.
Yeah.
So you've got the 3 components in there that you have out of order. Stop prioritizing the least important thing.
Correct. That's a good one.
And people don't realize and said, let's play the numbers and play the game.
Yeah.
And if you want to gamble and take a risk, by all means, go for it.
Right.
Why? Because if you leave my queue, I have 3 more coming in because they're referrals from the people that we took care of and did right by them. And I don't mind having that conversation. I've been doing this a long time, and I never lead with price because especially in my vertical, construction and lot lending and one-off portfolio lending, price isn't an issue. Either we can do it or we can't do it. And if we can do it for you, it isn't going to be free, but we're not going to exploit you on the situation. And that's what I like about what we do.
That's good. That's a good one. I'll have to use that. Do you want to close or have 1/8 of a rate lower? That's good. Scott, are you a native to Arizona?
So I moved down here in January of '89 to play baseball in college from Colorado and realized I did not have to shovel snow off the field.
Oh, where are you from?
I was born and raised in Denver.
Denver. Okay.
Yeah. I came down here and realized it's beautiful. Now, in January, it was absolutely gorgeous. Nobody told me about June.
Yeah, right.
And so I went from beautiful, gorgeous to commit to, wait, what a minute. So, but I love it. I've been down there ever since, you know, I'm here, my family's here, my 2 daughters, my granddaughter. It's, and I love it down here. So all my family wants to visit in the winter, which is fine. So I'm good with that.
The snowbirds.
So, yeah, exactly.
Yeah. Okay, cool.
Yeah, so when I moved here, I would say I came in January of '89. Phoenix has tripled since I moved down here.
Oh, yeah. I feel like in the last year. It's even.
I was going to say, I was going to almost say something. I was like, only triple? I think it might.
Well, I'm talking infrastructure, everything, size. And, you know, when you get to the point where it was funny because one of the big papers I did at college at ASU was talking about Megapolis, which was basically combining Tucson, Phoenix, and Casa Grande because of the I-10, I-8 corridor. And that was one of the things we talked about by 2050. Well, guess what? We're on track for that. You know, you've got so many people now moving from Inland Empire in California because we know what a grease fire California's been on a lot of prospects. But you can buy dirt out here for cheap. All these companies are moving out. Well, that's why there's so much building going on. That's why so many apartment complexes are going up because people are like, hey, we need the workers. If you've been on the West Valley into 303 and the I-10, you know, they have 1 million square feet of warehouse space opening up every 30 days minimum. It's crazy how much growth is going up out there. And so that's where all the homes are. So now my areas, I have a lot of focus out there. Why? Because all the top brass from these big companies moving in want to live in Verrata, want to live in a custom home, and that's when I work with you on some spec homes, because they don't want to wait 18 months for, maybe 24 months with permits and everything to get a custom home.
Yeah,
They'd like to
time.
walk in, pick their last little finishes and go.
Yeah. No.
Yeah.
Right. And that's why we're starting to see a big surge in that spec lending, especially in the higher end custom homes.
Yeah, it's funny. Even I've gotten, let's just say in the past 6 months, maybe even a year, and we know why, but way more like percentage of calls for land and construction. Like it's.
That sounds like fun. Do you ever go look at the houses after they're built and been like, wow.
Sounds like fun.
Why'd
Sounds
you
like
pick that?
death.
So it's great that you brought that out. When my wife and I were dating, it was the first time that I was doing this fun. I would walk into custom homes all the time, and the builder's like, "Can I help you?" I'm like, "Hey, I'm with the bank." "Oh, come on!" And they give you the tour. Didn't say I wasn't the lender on this project, but we would walk in and get tours and get ideas. When I won the Powerball and got a lot of money, how I wanted my custom home built. But yeah, I walk through houses all the time, whether they're my projects, whether they're my builders' other projects, other builders. I'm the loan officer, as you can tell. I'm really shy and quiet. Well, I don't have a problem walking on a job site and having a conversation with a general contractor because I understand their business.
Yeah.
So where you don't get, people, I'm not going to come in dress shoes on a job site, but I'm going to come in and say, look, this is, what's going on. How can I bring your potential clients a suitcase full of cash so you can sign a contract to go build them a house? They don't turn you away.
Right.
If you're trying to sell to them, they're like, get out of here. We don't want that. But you have to understand their business and let them figure out what your value to them is, where everyone else is trying to sell themselves. That's not what I do.
Right.
So
yeah,
usually they don't
value.
kick me off the job site. So
That's good.
Well, you got the money.
well, that's it. That's what I tell everybody. You don't get mad at the money, man.
Don't get mad at the money. I love that. I'm stealing that.
You can have it.
Don't get mad at the money.
Don't get mad at the money, man.
So what do you like to do for fun?
So my absolute favorite thing in the world is to be dad. So now that the kids are way out of the house, now I get to be granddad. So my granddaughter just had her first birthday.
Oh, so cute.
I've been so busy last year, but I love to play golf. I love mountain biking. Those are kind of my things.
Golf's fun. I like
Yes.
golf.
Yes.
Mountain biking, like literally up a mountain.
Oh, yeah.
One day we got to go because I can't remember the last time I went on the golf course. Yet I'm in the financial industry. It's a little odd, I would think.
Yeah. We'll go get a couple of builders and go play. How's that? We'll call it office time.
Yeah, but
That'll be
not
fun.
anytime soon because it's getting hot.
It is kind
Didn't
of.
have to be in Phoenix.
Very true.
That's true.
Uh-huh.
Where do you like to? Where else? Colorado.
Denver? No, I was going to say Denver.
Prescott, Flagstaff,
Oh yeah.
Oh, yeah, yeah.
Solo. Yeah.
Yeah, that's close.
That makes sense.
So it's all about knowing the people that have the connections at the places that you want to play. That's half the battle.
I just want to start at the driving range.
And I think a lot of people used to have that old mentality of, it's a waste of time for business. The way that I look at things, and when I used to run a cabling division for a company, my old boss said, I'm not paying for you to go play golf. And my answer was, okay, then I get double commission on any deals that I land because I took them to play golf.
Yeah.
And he agreed to it. We're still great friends, but we agreed to it. So we shook hands. I started laughing. I said, you don't know how I operate. I go back then I was taking a CIO director who was making $250,000 a year. I'd spend $150, $200 for 4 hours of their time.
That's nothing.
Tell me we're not going to bond ahead of time, and I'm going to decide if I want to work with him, but
Right.
he decides if he wants to work with me.
Yeah.
And so when you look at that opportunity and they're like, Scott, I want to go play again. I had so much fun with you. That's all that counts, because what does that lead into? It leads into the thing, do I have something that fits your needs? If the answer is yes, we've already built the rapport.
Yeah.
If we don't have it, that's okay. But it allows me to do my qualifications. Is this really going to happen? Is there something there? Do I want to work with this person? Are they gracious and they tip the drink person? Do they short the tip, the drink person? Oh, okay. Maybe they're really short on budget, short elbows and deep pockets, right? Where they can't find their wallet and do the job. I don't want that business.
Yeah.
Because I don't want to be the leader in the race to zero. That doesn't make good business sense.
Right.
And so you kind of take those lessons that you learn knee deep in the fire, and you kind of take them out here. And that's why I'm able to very quickly determine if somebody's worth working with, if there's something there.
Yeah, that's totally true. You know, I mean, we're human at the end of the day, and you want to work
Some
with people.
Some of us are.
You want to work with
Superman
people.
like you working 8 days a week.
I know, literally. You're not human.
I don't know how much longer we're going to go with that intensity.
But yeah, you want to work with people that you trust, first of all, that have good character. I mean, it's hard to work with jerks that don't follow through. We have all met
You know
them.
my thing is, I think I'll actually take a jerk over a not jerk if, and I mean if, they are decisive.
Yeah, that's what I'm saying. They follow through. They do what they say they're going to do. They could be a total asshole about it, but they do what they're going to do it. They're going to do it.
Oh my God.
Yeah.
Yes. Why is it so hard to make a decision, even if it's no?
I've taught
because
sales
people
training.
overthink everything.
Yeah, I taught sales training for 20 years. And one of the things I would tell the salespeople when you're talking to a prospect, tell me yes, tell me no, tell me now, I got to go. And you lead off
That's another one.
That's a good one.
Tell me yes, tell me no, tell me now, I gotta go.
Tell me yes, tell me no, tell me now, I gotta go. We had so what? Wait, what is it?
I'm full of
Well,
these.
some will, some won't. So what?
Who's next?
Yeah, that's it. And so when you learn to have that conversation, you start off, look, no is perfectly okay.
Yeah.
That tells you I'm not trying to get the deal. It either is or it isn't.
Yeah.
You tell me what's going on. If there's something of value that I think because I can't kill it in the first 5 tries, I think there's something there. Yeah. And I think that's the biggest problem is so many of my peers try to put the square peg in the round hole. And that's the reason I'm so busy with people that have legitimate deals. One of my biggest vertical markets the last 18 months is the major remodel. On a major remodel is different than ground up. There's a lot more risk from a lender.
Remodel? Like someone
Major
has a
remodel.
house?
Yeah.
So they bought a house.
They already own the house.
That they don't
want to do
like.
a major remodel, which is like add square footage, put a second story. So now they're using the equity in the lot to basically fund their project, but I've got to come in and take over the whole thing. I start tearing down walls. Guess what happens to my collateral? It rapidly depreciates to basically to the point where it's only dirt value.
Right.
So if I don't put my ducks in a row, put money into the construction loan account, so halfway through a project, let's say that the owner is out having cocktails with the builder and they get a Powerball ticket and they won $100 million and they disappear to Europe. I've got to have the next builder come in according to the contract and the price and the scope of work to finish the house because that's my collateral for the loan. And knowing that I'm safe on my money because I didn't do 100%, I can get the house built at 70% of the value of what it's worth and sell it. I don't care about making money. I just want to get my money back out of it. So that's how you have to think. You always assume as a lender, worst case scenario, how do I get out of this?
Yeah.
And so I saw so many lenders that didn't know how to tie down a construction loan on a major remodel, that all of their strength was tied into the existing home. As soon as they started knocking out walls, the value went down, they got upside down, and you can do 20 major remodels and all your profit on those 20 remodels can be taken out by one gone south.
Yep.
And boom, it's like dominoes. It took all of your profits for the previous 6 months. And so that's why then my phone started blowing up from builders that were doing major remodels of, hey, well, it used to be you can go get a home equity line of credit for $500,000 if it was there. Now all the lenders are capping it at $200,000. So what happens if your construction cost is $500,000?
Or they go up, or contractor runs off with your money. Happens all the time.
Yeah,
Exactly.
I've heard that. That's scary.
And that's why we bring a value add. My number one competition isn't another lender. It's the homeowner wants to pay cash. And so my answer to them is, don't listen to me. Go talk to your financial advisor. If you're making 12 points on your money and borrowing from me at 7.5, tell me how that doesn't make sense.
Right.
On the other standpoint is, we're a fiduciary of your money. You're going to borrow $1 million from me. Well, there's going to be checks and balances that builder has to perform in order for me to issue your money to them. And they're all CYA scenarios from a legal standpoint. Why? We're the fiduciary of your money. Mm-hmm. And a lot of people don't realize, look, you want to go travel Europe, you want to build this home and go all over the place. Are you going to fly back and do an inspection? Do you know if that builder did that work? You're just going to give them money? No, that's our job. Mm-hmm. And they're like, okay, now that changes the game. Now I want a partner. You've mentioned that word before. Now I want that partner to help me get to where my goals are and doing it the right way. And that's where we have the big value add. We've been doing this for almost 35 years. The group that I'm with has been doing construction lending in Phoenix area for almost 35 years.
Wow.
And a lot of people,
time.
a lot of the big banks, the Wall Street banks, oh, we'll try it. Okay. Try is the optimal word there. Yeah.
Nice.
Well, we appreciate having you on the show. I think our time is up.
Thank you so much.
But
yeah.
Cheers.
What a great
cheers.
asset.
And
I mean,
if you want to get a hold of Scott, give them your contact information.
Well, the best way to reach me is probably email scott.kerbaugh, KERBAUGH @azfcu.org, Arizona Financial Credit Union.org. That's probably the best way. You can always reach me on my mobile phone, 602-384-4178. Let me know you heard me on the podcast. And yes, after hours are okay. I take phone calls on weekends and up to about 10 o'clock.
thanks,
Very
Scott.
good. Boom. All right. Well, thank you for listening and thank you for coming on the show.
Thank you for having me. I really appreciate it.